I'm gonna throw some terms at you today that you may not have heard before, but that's okay because I'm gonna explain them all to you right now. Hey everyone, Brittany with Brittany Hannon Real Estate, and today we're going to talk about investing terms that you need to know. So if you're looking into investing, if this is something you've thought about, these are some terms that you may want to pay attention to. Now, these are just the basics. I'll do another video that goes into more depth on some other terms, but today we're going to talk about the beginner terms that you just need to be aware of. Don't forget to like and subscribe. Hit that notification bell so you get notified when videos just like this come out. And let's jump right in. The first thing you need to know about is ROI, return on investment. This is going to be the dollar amount that you want to make to be able to make sure you're getting a good return. So we know about in the stock market, we can see the returns averaging maybe 8, 9, 10%. That would be a pretty good stock. In the real estate market, you're seeing a lot higher, but you're also taking into consideration a lot more factors. Again, we'll get into that into another video, but what we're talking about is you're looking at equity, you're looking at how much you paid for the property, you're looking at the value of it now. So there are a lot of factors that go into figuring out your return on investment. So basically what we're talking about is if you invested $100,000, you might want to see $10,000 in a return. That $10,000 is a 10% return on investment. So that's what we're talking about when we say return on investment. What is cash flow? Cash flow is something that is pretty self-explanatory, but let's break it down. So cash flow is what you receive after you pay all your bills. So after all your expenses, after your debt service, meaning your mortgage, the leftover is your cash flow. So let's say you have a mortgage of $1,000 and you're able to rent it out for $1,500. That $500 is going to be your cash flow. Now, it's not quite that easy because you do have to take into consideration things like repairs, vacancies. You definitely have to consider all of those things. But when we talk about what is cash flow, that's what we're talking about. How much you're bringing in minus everything that's going out. The balance is your profit or your cash flow. Now, on that same note, what is PITI? This is something that you're going to hear thrown around in lots of real estate investment circles. And basically what that is your principal, interest, taxes, and insurance. So your principal is the main amount that goes toward your mortgage. The interest is the interest on that loan. So if you paid 100% in cash, you don't have to worry about any interest. But many of us are putting a mortgage on a property, so we would have that interest. Taxes are, of course, our property taxes that are built in, and then insurance. Insurance is your home insurance. So your PITI is usually paid in full. That's usually what you think of when you say what your mortgage is, because you're paying your principal mortgage and you have all of these other things wrapped up into it. Some of them come out of an escrow account, so a third party is holding on to that, and then other things come directly from your bank. Another phrase that I talk about a lot and that I know a lot of people have heard it is called house hacking. House hacking is when you live in one part of your house and you rent out the other in some form. So the benefit to this is you get to get into a property putting a low amount down, 3 to 5% down. Whereas if you were an investor where you were just having an investment property and you were not going to occupy it as the owner, you would have to put 20% or more down. So this is a good way to get in and to supplement your income because you have people living there. So there are lots of ways to do house hacking. You could buy a duplex or a triplex or a fourplex. You could live in one, rent out the rest. You could live in one room, rent out the rest of the rooms. You could Airbnb it. You can do lots of different things to be able to house hack. You could buy a single family house and then have a guest house or a mother-in-law suite or a casita in the back. So lots of different options for house hacking. I think this is a great way to be able to break into an expensive market or to be able to figure out how to purchase your first home. Flip is another term we hear a lot, and most people do know what that is. Basically, you're buying a house that's a fixer-upper, it's a little run down, it can be a lot run down, or just need some cosmetic fixes. So you buy that place and then you fix it up to the point where you can either sell it, which is usually in the short term, or you can do what's called a live-in flip, where you live there and over time you fix up little things or big things here and there. So this can be a complete gut job. You can take it down to the studs, Or it can be something where it just needs some paint and new floors, and that really is considered a flip as well, as long as you are taking it and improving it over time. Another term that we use when we talk about that is forced appreciation. So you buy it at one amount where it can't really be sold higher than this in its current condition, then you improve its condition, and when you get it reappraised, there's a lot of appreciation that's been gained because you have forced that appreciation because of all of the improvements that you've made. On the opposite side of the spectrum is a buy and hold. So you buy something and you intend to hold it for a long time. This is my favorite way to buy real estate, is to buy it and hold on to it for a long time. When you buy and hold, you're really looking for that long-term appreciation over 10, 20, 30, 40 years. With a buy and hold, you're not looking to make a quick buck. You're really looking at the long-term appreciation of this. When you're buying to hold, you don't have to focus as much on the cash flow, because when you're getting $50 or $100 to start, that's okay. I even know of some investors who don't mind losing money in the short term because they're really in it for the appreciation. And we know over time that real estate just continues to go up and up and up. And so that is really a safe bet if you're looking for appreciation. Now, there are parts of the country where there's more appreciation and there are parts of the country where there's less appreciation. So depending on what your strategy is, that's going to be where you determine where you want to be. If you want a ton of appreciation, you're probably going to look in the higher end markets, because the lower end, sometimes Midwest markets, don't have as much appreciation. Over time, they will still appreciate, but not at the rate as some of the other higher end places do. The last one we're going to talk about today is the BRRR strategy, which is buy, rehab, rent, refinance, and repeat. This term was coined on BiggerPockets. David Green wrote a book about it. The way this works is that you're usually getting short-term money, so hard money or private money, and you buy your investment property with this. Then you fix it up, you rehab it, you get it to the level that it can rent for the highest dollar amount, and then you have it reappraised. It is going to be reappraised at a higher amount. Then you can refinance it to be able to pull money out, because now you have forced that appreciation and you're able to then pull money out and you're able to use that on your next deal. So you can repeat. So buy, rehab, rent, refinance, and repeat. That is the BRRR strategy. That's it for today's video. If you enjoyed hearing about investing terms, I have a lot more where that came from. I'm going to do another video in the next few weeks about more investing terms. We're going to get a little bit deeper into the weeds, but if you are looking to invest, I would love to help you out. I invest out of state and I do house hacking. So comment down below to let me know what your questions are about investing. I would love to help you get started on your journey. Don't forget to like and subscribe, hit that notification bell so you can see more videos just like this as soon as they come out, and we'll see you in the next video. When you focus on buying, so buy, rehab, rent, refinance, no. You're not looking to make a quick buck. You're really, gotta sneeze.